Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. IMF concludes visit, says no fixed timeline for second tranche. Port City launched in Dubai and Abu Dhabi. S&P upgrades Sri Lanka's currency rating. In our main story this week, on Wednesday, the IMF team ended its review visit in Sri Lanka. The mission concluded that despite early signs of stabilization, the country's full economic recovery is not yet assured. A key development which was noted was that there is no fixed timeline for the disbursement of the second tranche, as the country had fallen short in two areas. Tax and debt management were widely considered as not meeting IMF targets. Ranjit Balapitiya, State Finance Minister, said tax revenue could fall short by as much as 100 billion rupees. The IMF team added that should the two conditions be met, it can proceed further. This can be seen as a setback for Sri Lanka's progress, as a successful review as needed to enable foreign investments and stall development projects to recommence. On Tuesday, the official launch of Colombo Port City took place in Dubai and Abu Dhabi. Former UK Prime Minister David Cameron promoted the Colombo Port City at an exclusive event. Cameron highlighted the role of Sri Lanka in the new Indo-Pacific economy and emphasized that now is the time to invest in the port city. Further, President Ranil Wickremesinghe said that new laws will be introduced to transform the port city into the Colombo financial zone, granting it jurisdiction over offshore activities. The Cabinet approved the move to enter into a loan agreement with the Asian Development Bank to obtain $200 million, subject to an annual interest rate of 2% with a repaying period of 25 years, inclusive of grace period of 5 years. This is slated to initiate policies to implement programs to enhance the conflict management framework and stabilization in the finance sector under the first sub-program. Development of an all-inclusive resistant finance system under the second sub-program has also been proposed. S&P Global Ratings raised Sri Lanka's local currency rating from ST selective default. It said that it reflects a forward-looking opinion of the country's creditworthiness on local currency obligations following the completion of the government's domestic debt exchange program with the superannuation funds. It added that this suggests that the government will continue to service its unaffected outstanding local currency bonds in the near term, and however warned that Sri Lanka remains dependent upon favourable economic developments to continue to meet its financial commitments. In our weekly tourism update, tourist arrivals in the year crossed the 1 million mark. This was helped by 88,885 visitors during the first 24 days of September. However, the month's target of 120,000 is unlikely to be met. Sri Lanka is targeting 1.55 million travellers this year, rising to 2.45 million next year. Arrivals from India continue to increase at a steady pace and are now at almost 26% of month's arrivals. Now let's take a look at the weekly movement of the All-Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Tuesday, yields on all maturities contracted. Bids amounting to 136 billion rupees were received, of which only 50 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging between 323 and 324. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.